Hello, ladies and gentlemen. Welcome to the second panel of MuMAC 2020. It's a pleasure for me to host this panel. We've already heard quite a lot about the anxiety, the risks in the market situation currently. What we want to focus on in this panel now is opportunities created in this special situation. So opportunities in distressed times under COVID. We have a very diverse panel on this today. I mean, I'll quickly start you've seen with Alex Partners for the Bacher. I work mostly on transformation and restructuring. So, of course, when speaking about opportunities, that's a type of opportunity that I see with my colleagues and us of being extremely busy currently. But that's not the opportunities we want to speak about here. And I could probably go at length on explaining what we see as current opportunities, but I would rather focus on introducing my panelists. Simply speaking, and please excuse me if I simplify that a bit too much, we have two investors, one from a, say, more mid-cap, traditional value-oriented perspective, one more from a, say, not distressed, but say special situations focus. We have an M&A advisor, restructuring distressed advisor, and we have an insolvency administrator who also does restructuring advice. I would like to ask each of the panelists to quickly introduce themselves and give a bit of a background to their professional profile, what they see, and then we would go into the content. So maybe we just start with Mr. Neumann on the left.
Sure, absolutely. Hello, everybody. Jan-Daniel Neumann. I'm a partner of Bregal und Nema Capital. We are a mid-market investor that roots back to the Brenningmeier family, so a retail family. We do direct investments in Germany, managing roughly 2 billion euros currently. So everything ranging from 30 million on the lower end of equity to 200 or a bit above on the higher end. We are absolutely not a distressed investor, so I look at this more from companies that do perform and the opportunities that the current environment and crisis bring to us. Looking forward to the panel.
Perfect. Yeah. Thank you very much. My name is Axel Geuer. I'm actually co-founder and managing director of Equita. Equita is an investment house based in Munich that is investing its own funds, primarily driven by a family office. What kind of situations we are investing in? Those, as mentioned before, are primarily, they're called special situations, but this is a rather general term. In all the cases, I can say, these situations require more or less immediate operational management of the target that we are buying. So targets are usually in economically challenging situation. We are looking into divestitures of large corporates that don't want to deal anymore with non-core businesses. We are looking also at succession situations in families where due to the generational transition, things went into the wrong direction and a new shareholder needs to be found, also driven by banks sometimes. Now we are also looking into insolvency situations wherever it makes sense that we can contribute some operational support to those situations.
Yeah, hi everybody. My name is Timo Clays. I'm a partner with PwC here in Germany, heading our M&A activities in special situations, or as we call it, distressed M&A. Before joining PwC last year, I grew up with another Big Four company and ended up as a partner heading their distressed M&A activities. We're running 5 to 10 distressed M&A processes a year, both on the sell side as well as on a buy side. So I think we have quite a good view on current activities in the distressed M&A market, and happy to share that with everybody here.
Yeah, hi everyone. I'm Arndt Geiwitz, not only insolvency administrator, also certified public accountant and tax advisor, and partner of a company, SGP Schneider Geiwitz, with 350 people and 22 branches from Ravensburg at Lake of Constance up to Hamburg, and we are doing not only restructuring business, with half of the business of our company. We are normal certified public accountants, so I see both worlds, the difficult worlds of insolvency and also the normal world, and I think that's a good point for us. And yeah, having had some famous cases in the last years, also Galeria Karstadt Kaufhof, where I was joining the self-administration team, so not only from the insolvency administrator side, also from the management side, and yeah, happy to be here.
Okay, thank you. Just a technical note before we go into the content. For the audience online, as in the previous session, you're absolutely invited to give us any questions. The organizers will help me identifying those, and I cannot promise that we'll have time for all of the questions, but we'll try to address the most interesting ones at the end of the session. Before we go into the actual opportunities piece, and as we said, we've spoken, and also when we got together earlier this morning, and the first thing is, of course, speaking about all the distress and what's changing, what's difficult, what's insecure, and no one knows how this proceeds. There is an upside, of course, and that's what we want to focus into. Just before that, I would like to start with the question, what actually, in practical terms, what is different in these times? And we have different perspectives. I would actually probably want to start with Mr. Geiwitz. Of course, we heard not that many insolvencies, in the contrary, rather currently. Nevertheless, I believe the clients or the companies are coming with questions and how to treat this special situation, the suspension of the obligation to file, things like that. So what's keeping, what are people bringing to you these days, and what's different?
That's many things different, because I never had such a situation like the COVID-19 pandemic, but now from the normal companies, many of the companies need money because the business went down, and these are not only companies we all read in the newspaper like retail business or airliner business or tourism. It's also logistics or machinery manufacturing companies who lose a lot of contracts at these days. And they need money, and we have an intensive discussion if it makes sense to take the state aid of KfW-Darlehen, and because they put a lot of loans on the debt side, and this is not always the solution. On the other side, on the insolvency side, we had a very special situation of the shutdown on the retail side, and there was no more sales from one to the another day, and that was a shock for many retail companies, except the food companies, the food retailers, and we also saw that that the M&A market went down these days. You couldn't make any site visits, no flights, and so on. And that was quite a difficult situation also for us. You can only restructure over an insolvency plan, because at an asset deal you have no buyer on the other side these days. I think this is changing right now a little bit. I think we're going back a little bit more to normal, more flights, and also the M&A market is increasing, because we're also doing the M&A advisory, and the colleagues of Schneider Geiwitz Wieland, they told me they have now really a large increasing numbers of cases at the moment. So we'll see if we will see normal situations in the next months.
Thank you. Maybe to continue, you already started mentioning the M&A market, and maybe just to continue in this row, Mr. Clays, as an M&A advisor, what are you seeing these days? So transactions that, we saw transactions, of course, being stopped, being pushed to the future. And Mr. Geiwitz already mentioned, there is some notice, and we see that as well at ex-partners, there is some sense of things picking up again. Is that also what you see? And if so, potentially what might be different on these transactions, or what people are discussing these days in terms of, warranties, insecurities? How do people approach this?
Yeah, this is absolutely our experience as well. So what Arndt Geiwitz said, I can confirm that. And our day-to-day work has actually changed dramatically over the last couple of months. A year ago, I thought it's impossible to run a remote M&A process out of my home office. Yeah, but we did that at the beginning of the Corona crisis, and still facing the issue that quite a few investors were hit by the crisis as well. And in the end, they were not really in a position to act or even to invest. So basically, deal flow came to a stop. But now it's picking up again. And what we see is that it's not like in the month or even years before, concentrated just on a few sectors and industries. We rather have the impression that it's spreading out through the whole economy, and you mentioned quite a few industries which were hit by Corona, even more dramatic than other ones. And what we actually need to get M&A deals done these days is flexibility. Flexibility mainly from the investor's perspective. For example, with regard to timing, a lot of the processes are fast-track processes because there is an urgent need for cash, as you explained. You need to be pragmatic. There's not a lot of time, but also due diligence work is completely different when you're not able to physically visit the company or the plant and have face-to-face meetings. So we all have to adapt to that situation, but I see that things are coming back to normal again, and I think that will help the M&A market quite a bit.
Okay, thank you. I mean, this was not staged, but you already alluded to the investor side, so maybe turning over to the investor side. But coming back to the original question, what is different these days? I mean, are you looking at the companies in your portfolio differently? Are you reconsidering investments? Are you having second thoughts? Are you doing different analytics on what your portfolio does? Maybe, I don't know, either one, maybe Mr. Geuer?
Yeah, thank you. Actually, our business basically has two, let's say, two pillars. So one is the operational management of the portfolio companies, where we with our own people are involved. The other one is the M&A part of the business. So let's look at the operational part first. And there, if I recall the past months, it very much depends on flexibility was one word that was dropped already, on your flexibility or on your ability to differentiate your approach with regards to the operational management. Differentiate depending on which region am I working in. You know, there are lots of different regulations depending on the countries, and also particularly which industry I'm working in. We are running a construction material supply business in the Netherlands. It has a very different situation than the automotive suppliers that we are operating with the headquarters in Germany. It very much depends on really understanding quickly enough what are the government aid programs that you can use. You have to be fast there also, because you never know how big are the buckets. Construction business was very limited, in a very limited amount affected by the crisis. Of course, there was also a downtime, but you know, it's back to normal almost, I would say, at least in the Netherlands. When it comes to Germany, of course, as I already mentioned, very strong focus on short-term work, making sure you really understand from week to week, very detailed meetings about how many people do we need, what are the thresholds for receiving subsidies. That has to be monitored very closely. Also, of course, in parallel, you have to look at your cash position. Looking at and that relates primarily to the automotive business, where we are gradually, also there, it depends very much on the segment that you're working in, but where we are gradually recovering also because there's a focus on premium products that were not that much affected. With regards to the M&A area, actually, I think so far, we have not closed a deal, a transaction that was, triggered by Corona. We see them now lining up. However, they were also kind of damaged, I would say, or affected already before, but Corona really gave them the kick. But we have to consider there was a summer break, all the processes came down a bit, so we are seeing this now. I should only maybe mention one transaction that we actually closed on April 1st. So really more or less in the midst of the lockdown. And there Corona, and now looking back, I would say we were lucky because Corona really came into this transaction last minute. And we were able to, last minute adjust some of the agreements parameters. But also there, I think what was particular, and that very much depends on the type of business that you are in. It was an automotive supply business, and that's what Corona now, kind of asks for all the stakeholders in a transaction. It was a transaction and negotiation that was really performed in a very broad cooperation. Customers, suppliers, employees, everybody more or less sat on the table way before the signing, and it was clear already. Everybody had an interest to make this company survive the Corona times, and that gave us as a buyer a lot of certainty. And I think that's what we are going to see. Maybe I can imagine a lot more in the future, because it's not just the company, except maybe for retail, but for many companies, it's important to all the stakeholders, and that can give a solution. They say you share the risk that way.
Thank you. I mean, that already leads a bit towards the question: what are the opportunities, or what may be different going forward? Just before we go into this, just Mr. Neumann.
Sure.
I assume for you it's the least change, right? I mean,
yes and no, I would say. We came out of last 5 years of probably signing a transaction almost every month. So I think we did 53 transactions over the course of the last 5 years, of which 19 what we call platform deals. So that's the original investment. And if you come out of this pace, and as a mid-market investor, you look at 10 years of sort of bull market, if you want to call it, with great opportunities, growth. I mean, January, February, I think our portfolio, which is the 19 businesses, organically was up 12-13% on average. And then you hit March, and you hit full steam the brakes. So I think that for us, what changed was, as I guess for everyone, we needed to analyze really the situation and portfolio first, and really see what do we have in the portfolio. We have a very broad portfolio, so it ranges from retail, auto supply, but a lot of technology-enabled businesses as well, software businesses, and so they are obviously very different, and we needed to really dive deeply to see what will the impact really be. And I think we then had, until today, 3 stages really, where we said first was the analysis period, where we wanted to see that everyone, all of our portfolio companies are well financed, cash first, analyze the impact. I think the second stage then, from May timeframe onwards, was really to consolidate, see that we find solutions where we needed to find solutions, and to really start also to think forward on the portfolio. What are the opportunities that the crisis will bring? And then that led to the third stage, which is currently ongoing, where I would say the new normal, where we accept that this is the environment. We personally believe that it will be with us for quite a while. So we need to really make sure the portfolio is well adapted, but also the way we invest is well adapted. And we signed one transaction since, independent of a few add-ons, which is a software deal, which is stating the obvious. It's more downside protected, is a bit the favor of the day for that reason. And we really, focused more on the underwriting side. We adapted our underwriting metrics. We included, on due diligence, we included the Corona or COVID impact over a prolonged period of time. And I would think that that changed quite a bit. But generally, I believe if you look back, the last 20 years, the best vintages of investment were those that, followed the crisis. So, 03, 04, 9, 10, and so there will be opportunities coming out of this, for the portfolio, but also for new investments. And I think we all need to accept that this is the new normal and that we need to adapt, to that situation for over the midterm, at least.
Thank you. And that, I think, really nicely leads to the question that we actually want to address today. What are the opportunities coming out? From the discussions we have with our clients, we tend to structure this a bit in what opportunities in the in the portfolio, in the individual assets. So what changes at asset level? How can you optimize the companies? What can you do differently? Is there more openness? The second dimension would be, of course, what does this mean in terms of transactions? And a third dimension then, of course, in terms of restructuring. So how could COVID teach us that we can do restructuring differently? And we started discussing this morning already as well. But in those three areas, I would first start to go back, because we already got into this a bit, the way you started looking at your companies and considering their current situation, their resilience to potential additional shocks, and then the way forward. So question maybe just really the way back. So starting with you, Mr. Neumann, again, you very nicely described what you did so far. And so when you look at your companies, what do you think going forward? I mean, will you focus on? Where do you see opportunities to do things differently in the future?
In the portfolio, you mean?
Yeah. I'm looking at the assets.
No, I think it will be, it's a big shock to all markets, basically, and that leads to opportunities. And if you see that the competitive environment will change, the pricing environment will change, the ability potentially to reach out, more internationally to more, products in the portfolio, for example, is there. And I think the companies that are, well equipped, let's say, with cash, with an existing business model that works, obviously are primed to take that opportunity. And I think this is exactly the phase we are in right now. So we're trying to really, our management teams really try to work out, which are the avenues that we can actually take to get benefits out of this crisis. And if you look at, as an example, a company called Online Printers, which is doing online, receive online orders and then sending out the printed documents basically for marketing. Obviously, it's affected because we don't have any nightclubs anymore. Restaurants were closed. No more events like these where you typically have print products. But you can really take, sort of a lead into new product fields. So the masks, for example, is a great example, right? To be there and to be able to actually print and deliver these, in a very short period of time, and to then take the investment into potentially machinery that is required, and to take a view which of the product segments are really potentially winners of the crisis. And then you need to take a risk basically to really invest into those and to allow your management teams not only to look at cost containment but to also truly invest into potentially new fields that the crisis opens up basically.
Do you see an increasing, say, openness in the companies to ask big questions in terms of, think about the business model really differently, and also to discuss that with the investor?
Absolutely. I think that's one of the, if you can say there is a benefit of a crisis, that's the benefit of a crisis, that you have much broader discussions, you have way more openness of all stakeholders, starting with employees, taking management, but also customers and suppliers, to really say, hey, look, let's make this work. How can we make it work? And certainly the horizon is broader with all stakeholders, I feel.
I would also like to ask this question to the advisory side. Just before that, Mr. Geuer, could you, just to see the investor side, do you relate to this?
Yeah, I can pretty much underline also what Mr. Neumann said. for us, if you look at the opportunity side, definitely over the past months there was an opportunity, particularly when you have acquired, let's say, a distressed company shortly before. There are many changes to be implemented. Changes, one perfect example would be a relocation of a production. And if you have to do a relocation of a whole plant, it's very challenging and costly as well if you have to do this under full utilization. So in that sense, Corona and the missing demand from the customers gave us much more flexibility to handle these relocation processes, professionally and in a way without an interruption of the supply chain. And also, indeed, the challenges, the overall challenges that are out there make it easier for us to also explain harsh measures. People start to understand it. This is a very exceptional situation. And I think we have to, actually, if we look at it, it's a very drastic downturn of the business of all markets. However, looking at our region, we are not made for this. We have such a high fixed cost base. Most of our businesses are so stable, and then comes such a drastic downturn, and actually the businesses don't have the tools to adapt to it. And if you then look at the situation, how you're really impressed how well it was managed over the past. Of course, with a lot of money. I mean, consequences have to be discussed later, but amazing, actually amazing. If I see, just looking at it now, if I see how well overall business so far were able to cope with it, or many businesses at least.
It relates to what we see as well. I mean, in this sort of the Corona crisis being almost like a catalyst driving change in an unknown consensual way, really, with all stakeholders.
Yeah, exactly.
And at that point, however, I would turn over to Mr. Geiwitz and ask you, how would you explain that, or how did you explain that at your recent Karstadt situation, for example? Can you turn this into a positive story?
If you look at Galeria Karstadt Kaufhof, we had an intensive discussion if we try to get the government aid program, and with the colleagues of PwC, we worked on that to get an 775 million euro debt, a loan. But then we discussed that doesn't make sense, because if we take that loan, we have to pay it back the next 5 to 6 years and have no free cash flow to invest in the warehouses, in the department stores. And we have a lot of investments in the logistics and online, and we couldn't do that with paying back all this big loan. So we said that doesn't make sense. And in my opinion, we have a lot of companies who are now, I mean, I understand this, they say we need liquidity, and they take these big loans, also in the automotive supplier industry, and they have an overdebtedness, not on a legal point, but on an economic point, and they don't have money to invest in their business model, and they have a lot of work to do in the automotive industry. You know all these electricity mobility, digitization programs, and I think we will see a lot of opportunities for you in the next years, because they will come in the next years, because then they will have a problem with their business model, and if they are then attractive for you to invest, I doubt a little bit.
Almost leads us to the transaction question, right? I mean, so what happens in these situations, and maybe Mr. Clays, then what do you see as an opportunity also, well, for in the transaction sphere? Is it really going into a reshuffling within the industries, really, or what do you expect?
What we currently see is a significant consolidation, I would say, in the fields of old economy. And of course, that will show a lot of opportunities down the value chains. However, what makes our lives actually difficult these days is what you said. What's the new normal? Yeah, we all know there will be a new normal, but how does it really look like? Will we ever travel again like we did before? Will we ever go to retail shops again like we did before? And what about our leisure time. Yeah, will we go out again? Will we stay at home? So our job as an M&A advisor usually is analyzing a business model and showing the opportunities which are in the future. And we all know the hockey stick business plans which were written in the past, but I'm pretty much sure that that will be different. Yeah, and we all have to accept that there will be a lot more uncertainty in every business plan we see, because for the time being, we just don't know what the new will be.
I mean, he was almost directly addressing you. Do you see that also happening, larger opportunities for consolidation, or coming, at least, not happening yet, but coming consolidation?
Absolutely. I think if you take travel, because you mentioned travel, there's no doubt it's one of the hardest hit segments, right? But if you think about it, at least it's my opinion, strong opinion, is that human beings will revert back to habits. And so, if you segment as business travel, I think is a different ballgame and picture. But I think that people will resume to travel. But in which form, when, what kind, is the big question mark. So it's a massive opportunity set, because there's a major fallout and shakeout in the industry. It will not be as before, sort of that you have, the travel agencies, and then you have, the big guys and that do everything, and then the tour operators, etc. It will look very, very differently. And, the big question mark is how and when is it the right time to do, a bet basically on that structure, or a different structure in the market. But to me, it's no doubt that it's a massive opportunity. Timing it right, getting it right, will obviously be super difficult, but that it's an opportunity, and we should, better be there and look at it. I think I'm very convinced that it's the case, and that applies to a whole array of other segments as well. And the change will be profound, but change is good in a sense too, that it leads to opportunities and new ideas and new forms of business models. And obviously it's our mandate to hopefully make sure that where our portfolio is playing, that we are at the forefront and the winners of this change. But it will be with us for a long time, and it will be very profound. I think that's the two aspects.
Just to add on this one, you mentioned timing as a challenge for consolidation efforts. How about valuation? The previous panel already addressed that to a certain extent. How do you as investors now approach an evaluation? It's no hockey stick anymore, but
no, valuation is often market driven, right? And so not what we would like to see, but it's basically put upon us by our advisors. But what we see right now is that there is no decrease, there rather is an increase in valuation for all businesses and sectors that are actually benefiting from the crisis. Until most recently, we've seen the capital markets on the technology side, which were impressive, so to speak, on the valuation front. So the deals and transactions, at least for non-distressed part, which I don't really know, that you see happening, the valuation level is not below pre-COVID. I would argue it's probably above, because now you can really see which businesses are resilient, and it's proving against the crisis. And I know of a few funds that have deployed 65% of their entire fund since March, which, if you think about it, is quite impressive. And that's because they're very focused. It's often technology, obviously it's growth/technology, and there's a lot of conviction, and the conviction was sort of strengthened by the crisis, seeing, hey, there's they're really resilient, and even better, they're actually growing in a certain field in crisis. And so I think when we pre-discussed it, I think it's a K basically. There's parts that really take off, and the valuation is correspondingly high. And then there's a whole array of segments and companies that are so or even worse, and there is no market right now for these type of businesses. And I think we have seen that in the last the global financial crisis too, were, I think, since 2009, transactions resumed. But for mediocre businesses or so-so businesses, it took probably 3, 4, 5 years to have a real market. And I think this will hold true for this time around as well.
So you need to become even more careful in the selection, right, ultimately? And then the other way around, I mean, what does this mean for someone who's used to special situations? Is that a... Yeah.
I also agree to the K concept. I think in general, as many crises, also this one will accelerate the change that is underway anyway. You know, business models that were gradually going down are really wiped away now, more or less, in a very high speed. And others, technology sector, scalable, they are really booming, blossoming, and so on. But I really wonder, then there's also another segment, you mentioned it, the travel industry, the aviation industry, logistics industry. This will be there in the future also. But now they're loading up a lot of debt in their balance sheets. And I really wonder how we will, how will we value these businesses in the future? Will we deduct all the debt? There was nothing. However, in 1, 2, 3 years from now, hopefully, they are again performing decently. But nonetheless, you have to take over all this debt. So what will happen to these companies? Will they, will people step out of them and found a new business? Well, exactly the same, but in a new entity. So that's for me. Particularly since we are more focused on the kind of traditional business, not the cutting edge technology, that will be very, very interesting for me to see. And I have no solution or response to this yet. The only my scenario is there will be a lot of, let's say, zombie companies, which somehow need to be handled. And in businesses that have a valid model that will be that customers will ask for, and on the other hand, and that's what you mentioned, a lot of money is being invested now. In the course of all this, financing, interest rates came even further down. It also projecting to the future, interest will never go up. So, and that drives multiples. People want to buy assets. So we will see ridiculous, from our perspective, over the past years, ridiculous valuations. There will be huge differences between different models, much more differences than we saw before.
I mean, we heard the zombies before, and maybe I turn over to Mr. Geiwitz again. I mean, on these, how do we solve those situations?
Yeah, send them to me. I mean, no. I think we will get, or we will have already, a lot of zombie companies. And that's what I said before. I think we should think about, or these companies should think about to restructure their balance sheet as soon as possible. Because if they are, paying back all the loan and have no more money to invest in their model, then they will die in 3 or 4 or 5 years. And we will get also a new restructuring law in Germany, we will have more possibilities to take not only insolvency cases, or to file for insolvency. We can go out of court restructuring or something like that, but they should start as soon as possible, because otherwise they will die in 3 or 4 or 5 years. And then there will be some industries where we will have for a longer time big problems. Since all the retail industry, look at the cities at the moment. We have since years the frequency of people are going down 6% a year. So, and they are not really attractive at the moment. And we have many insolvencies, and we will get empty shops, and all the middle big towns, they're like 40, 50, 60,000 people, habitants. I see a lot of problems for us, and also for the retailers who are in these small cities. So I think I also believe on the K. I think there will be, especially look at food, look at and all with home and online will go up quite fast, faster than without COVID, I think. And then we will have some industries where I'm really afraid that it will get really bad. And that's, for example, some of the automotive suppliers, but not all. We have some who are performing very good and some very bad. So there will be a lot of opportunities, I agree.
you mentioned the out of court restructuring. I mean, we don't have a big tradition on that in Germany, really, different to our friends from the US, UK. Do you think that's an opportunity that, I mean, the German economy maybe could get used to that more?
Yeah, I think we don't have
Would that help?
Yeah. We are not used to it, and you know, if you look at all the bankers, they don't like it to restructuring out of court and keep the old shareholder in shape. They want to change. So that's the reason I'm a trustee in a lot of cases right now, especially in the automotive supplier industry, and that's also an opportunity because, you know, also with off-court restructuring, because I think you will have a change in shareholder on the shareholder side if you go in an off-court restructuring. The banks, they don't like to take the haircut and then give it to the old shareholder back and say, have fun, you know. That's we have another philosophy here.
Yeah. I mean, maybe it's deep hypothesis, but could this crisis or situation help the German economy to become more, say, dynamic, agile, flexible? If people get used to these,
I'm completely with you. Every restructuring case, if you see it in a country, or if you see it, if you look at a single company, is a chance to rebuild your company to get better out of the crisis than you went in. And I think I would wish that we get a new restructuring philosophy in Germany, also to insolvency cases. This is not the end. You know, you have a lot of chances. When you look at Galeria Karstadt Kaufhof, no debt, a lot of equity, and 320 millions of increase of the results every year. I mean, of course, we had to terminate 6,000 contracts with the employees, but on the otherwise, we have over 20,000 now in a good company, and then, so I think we should get a better thinking about restructuring cases of in court and or out court, and that would be my wish.
You already started to. I mean, looking at the time, I wanted to give everyone the chance for sort of a final word, but as I warned you before, I have a question for that, which would be, imagine we sit here 1 year from now. What do you think we will say we have learned over the last year, or what can we do better 1 year from now? Anyone wants to go ahead?
As I said, I think the situation will be with us in 1 year time as it is today. Unfortunately, will not be resolved. And I would probably say, you know, a lot of people, hopefully not us, will have wished that they would have seen that, accepted that, and adopted, you know, earlier on. And, you know, I think so, you know, my take is acceptance of the situation is the absolute paramount and key. Accept that it's not great, you know, things will not turn to the better anytime soon. And then prepare for, you know, what that means in terms of the portfolio, but also in terms of the opportunity set and the investments. I think that's paramount to be successful in this environment.
So be realistic today.
Yeah, on the conservative side, I guess.
So my, let's say my hope is that we come out of this crisis in a way that the culture would be more open to change, particularly when we look back and when we hopefully in 1 year from now reflect of what has been done, what kind of measures were taken in order to fight the crisis, to survive, that people would think, and not just, you know, the management, but also let's say all the employees would think, wow, we changed a lot because we were forced to, and eventually, hopefully it was to the good of the company. It would kind of, you know, trigger a more entrepreneurial thinking, that's my hope, that people become more confident in times of change, because usually, you know, many employees, they of course want to stick to what they know because they feel, or they think that it's safer, and hopefully the changes that we're experiencing now will kind of provide us with a lesson that also change is eventually leading to a safer, a more successful path. That's my hope. A different culture, maybe, at least.
So it's a bit Schumpeter, American style, American way. Thank you. Mr. Klees.
Yeah, I'm pretty much convinced, actually, that this crisis will help us, or maybe force us, to accept change and to see the opportunities it brings with us. because currently we're still investing far too much time and efforts and resources and human capital just in preserving the status quo. Yeah, we saw that in the automotive industry over years and decades. We saw it in quite a few other industries as well. We need to come over that, and we need to drive change actively, yeah, and not reactively. And if that helps us to change all of our minds and the minds of our entrepreneurial managers, that would be at least one good thing.
I absolutely agree. My hope is that we go in the restructuring cases more directly to the better company and not stay like it is, and that's what you're saying. And we have at the moment, the people are they are all afraid to go for an insolvency or to go to the restructuring case, and they're taking the loans, and then they wait and they hope that it all will that they come out. But you know, it's loss financing. It's so you are not investing in some new business. So I mean, there's no future with this overdebtness. So my wish would be go directly the restructuring case, off court or in court, and give the people and the employees a chance to survive on the long way.
I think that is an opportunity that we can take from this crisis, really. Hopefully, I mean, we all hope. We're a bit over time already, so I thank everyone, the panelists. I thank, of course, McDermott for organizing this. Hope this was, that worked well for the people, for the audience online. I mean, it's a bit of an unusual situation, really, and having no audience feedback. But I hope this was interesting. And again, thank you, everyone. And we'll hope that 1 year from now, we really will have learned what we were hoping for. Thank you.
Thanks a lot.
Thanks.
Thank you.